Good morning. Brandon here from Beast Mode Trading. I wanted to talk to you guys and give you guys a teaching video on the new floor indicator that we have. I've already went through and bought a system in my early years, spent well over $4,000, and this was one of the tools that I got with that. So instead of you wasting the same amount of money that I wasted, or I spent, not wasted, but I spent, this is a nice strategy that we use live in our chat room each and every day, that it could help benefit you. So this is how easy it is, right? So we're on a naked chart right now. I got the beast mode breakout strategy up. We call this the floor traders, because our theory is this. I know people that have 6 and 7 figure accounts, and some people even have 8 figure accounts, and they can't really scalp in the market. So they gotta hold their trades to get larger moves, and that's how they trade. So what I was taught, and this is kind of what they do, I'm going to show you right now. And if you like it, you can utilize this strategy and put it in your trading tool bag as well. So let's dive into it. So I have a 15-minute chart up, right? And the theory of this is you let the market open for the first 15 minutes. Once the first 15 minutes are done, then this candle would close, and the next candle opens right here, right? So once the first 15 minutes are done, the floor is put in. You have the ceiling, right? Well, I call this the floor trader strategy, but theoretically this would be the ceiling, and then this would be the floor, right? Whatever way it breaks out at this time when this candle opens here, we don't know if it's going to break to the upside or to the downside, so we let price action tell us. The second that it breaks one of these levels, you have high probabilities in that direction. So today it opened up here, it's trading, boom, it broke the floor to the downside. And as you see, what happened? You see how we got this large move down? Now, every day we may not get a large move down this quick, this fast, but we trade probabilities, right? And in the end, if you use proper risk management and you trade probabilities, you will be ahead of the average person, and you have a very high probability to finish the day or the week green. However, with this strategy, you need to be consistent. So you can't just trade it one day and then 3 days later take another one, because as traders, we do lose. But in the end, if you use proper risk management, 1 loss or 2 losses should not impact your emotions or stop you from taking the trade. So the rules on this is very easy, right? First 15-minute bar print, and our indicator that you see up here will auto plot with the high range and the low range, and we'll go over that here shortly. So this is how easy this is, right? Once this, let me get my drawing tool back. Once the floor is put in place, maybe it'll be easier if we do this. So the market's open for 15 minutes. This gray box is pre-market. This black box is our live trading. Once our first candle forms and prints, we're going to put a line here, and we're going to put a line here. The high of the 15-minute candle and the low of the 15-minute candle. Without even knowing which way it's going to break, we have targets on each side. So what you do is you take the distance of the high and the low, right? And you create the same distance to have a one-to-one to the upside, and then you create the same distance from the low one-to-one to the downside. How are we getting this one-to-one? We are simply taking the high all the way down to the low of the floor. We call this the floor trading strategy. That's how we're getting our measured move, right? So this strategy has about a 75% probability, right? Meaning in a perfect world, 7.5 out of 10 days, this would go out. And if it breaks to the downside, it's probably going to hit our floor, our target to the downside. And if it breaks to the upside, we have a 75% probability to hit that target to the upside, right? Now, if you come in here and we have 2 levels. We have our halfway point, right? Which I'll put dotted lines here, and I'm going to put dotted lines here, right? Or I'll just do a solid line. So with this strategy, if we break on this next candle to the downside, if it hits this halfway point, you have an 88% probability. That is a super high. That is a super high rate, right? So what you do, if this breaks to the downside here, your stop loss is the ceiling. If it breaks to the upside, your stop loss is the floor. So you got to understand that if price breaks here and then comes all the way back down and hits your stop out, you may lose 30 or 40 or 50 or 60% ROI on your trade. That's why risk management is very crucial. In hindsight, or not hindsight, in the flip script of it, if it goes up here and hits your 1-to-1 right here, you're going to be making 50, 60, 70, 80%. So we've already won 200%, right? So I'm not going to say it's going to be 200% every single time, but I'm going to say from a probability standpoint, your win to the upside has a limited side profit standpoint versus to the move to the downside, you can only lose 100%. Right. So if it breaks through the upside and cycles back down and hits your stop, you may lose 50 or 60%. But if it breaks through the upside and hits your target, you may be at 80 or 90% at this point, especially if you get some IV hike and depending on how quick and fast it moves in your favor. Right. So what happens is that say this trade breaks to the downside, hits our halfway point, you then take your stop from here and bring it right back down to here. So now you're in a risk-free trade. If you take 10 contracts, you got a choice. Me personally, I put a 5-cent trail stop in once it hits this halfway point on 8 of my contracts, and I let 2 ride with a stop right above my break even. And if it keeps falling down and hits my target, I then go in a trail stop on my last 2 remaining contracts. And if it falls straight down, then I just made that large of a move on 10 contracts, right? But just because I trade 10 contracts doesn't mean you have to trade 10 contracts. You got to trade. You got to use proper risk management to your account size, right? So just remember, first 15 minutes, it'll populate our floor levels, the ceiling and the floor. Whatever way it breaks, that give us a bias that it has a 88% probability to hit the halfway point, which would be right here, right there, and right there. And if it breaks to the downside, hit that 1-to-1, you got about a 75%. Right here, I'll put the square, or you got the square there. So knowing this, you're not scalping really. You may be in this trade for 5 or 8 or 10 minutes, or you may be in this trade for 2 hours, right? But I'm going to show you the probability of this and how consistent and powerful this is and why we've been making larger winners inside our room, right? So I'm going to erase all this. And right now, you should understand you understand the probabilities, 75% to the half target, 88% to the 1-to-1. In this strategy, if you enter here to the downside and you hit your stop loss, like I said, you can't lose no more than 100%, and you will not even lose 100%. You may lose, like I said, between 40 to 75 or 80%. But we're noticing that if it hits the halfway point, that's almost equivalent to our loss on the stop outside, right? But this is very, very powerful on SPY and all the ETFs, but you can trade this on any symbol that you want. So let's see how today played out. Our first 15 minutes are put in. I'm going to put levels here. We have our 1-to-1 would be about right here. Our half-to-1, I'm going to offset it, would be right here. If it breaks to the upside, our 1-to-1 would be about right here, right? Same distance this is from our 15-minute high and low. Then I'm going to put a line at the halfway point, right? Without even knowing what's going to happen, we have 2 levels and we have a bias. And if it breaks, we know the probabilities. And you know me, I trade probabilities, right? Next 15-minute candle comes. Guess what just happened? We opened up here. We broke through the floor to the downside. We have an 88% probability to hit this line, 75% probability to hit this line. Look what happens. Once it hits this line, you then remove your stop from up here right back to here. And guess what? You let your contracts ride, risk-free, hit your 1-to-1. You should be in a trail stop on all your trades. Me personally, I sell out of 75 to 80% of my positions. If I trade 2 contracts, I put a trail stop on half on one contract, and I'd let the other contract ride down here. But if it never hits this line down here and decides to bounce, guess what? I don't even lose on that contract. I break even. So I went on one contract, break even on the other. Today, I went on two contracts to the one-to-one. So in this example, if we would have taken a loss here, when price comes down and hits this one-to-one, our winner to the downside is larger with IV hike in our favor than what we would have taken there. So this is a good trading strategy if you don't like to scalp. You only want to get 1 to 2 trades a day. If you win your first one, guess what? You're done. You're going to win larger winners of around 50 to 100% on average, and your losers may be about 50%, 60%. So please use proper risk management when trading this, and that's how simple this is. So let's go back and look at this because our custom plotting lines don't work on a 15-minute time zone. You got to go into a 5-minute, right? So I'm going to erase these lines now, and we're going to clear the drawing set. I'm going to scale back and go to a 5-minute chart, 5-day, 5-minute, and look what happens, right? I'm so zoomed in that I can't even, there we go, let me zoom out. So at 9:15, these levels automatically plot right here, right? So 5, 10, 15, we had an automatic level plot here, automatic level plot here, and we have our central point from the first 15 minutes, where that's this middle line. So once it crosses this middle line, this is like technically our bearish zone. This is our bullish zone. So you can use this central line to even give you a greater bias, right? So if we break to the downside and then come back up into this box, we get above this level, we're probably going to the ceiling, aka the floor trading strategy, and we're probably going to break to the upside. So on this day, it hit our one-to-one, and all of our contracts hit our one-to-one, right? So if we go back and look at many days, so today, this is what this does. It has our high range, it has our low range. So the ceiling is 435.30. So what you can do is, say you're at a job, once this level prints at 45, you can come down here, create an alert at or below, put, right? Create. Then you come up here and you can put a level, and it broke because it just went off because price is underneath it right now. So then you come down here, create an alert to the upside, at or above, calls, right? Create. So now my alert's sitting right up here, and my put alert would be sitting here once this floor got put in right here, right? So we have a high, we have the low, the next candle could determine which way we break. We never know when it's going to break, but we know the probabilities. Look what happened today. So if I go back here and show you all these examples, I could sell you on this and show you how powerful this is right here, right? So let's go back and look at many days, because trading probabilities is all about being consistent in trading your plan. So if we go back and look at the last 15 days, I have no idea what the record would be. I know that we are very, very green. But remember, if it breaks to the upside, you got an 88% probability to hit the halfway point, 75% probability to hit the one-to-one, and you let price action tell you exactly what to do. So let's go back and look at a couple examples, right? And we'll keep a tab. On this day, 15-minute floor got put in. We never broke. We broke to the upside right there. Our one-to-one target got hit, and our halfway target obviously got hit. So on this day, you're 1-0. So we are 1-0 right now, so we don't lose track. We're going to do wins, losses, and we'll put a tally here, right? Next day comes, and 15 minutes, first 15 minutes come in. We put our floor in, right? We got the ceiling, we got the downside. Guess what? Pushes up, you would have got another winner. So now we come up here and we can put 2 winners, right? Now we got 2. I guess that's going to be more of a pain for us to keep doing that. But so we're 2-0 right now. Then we scroll over to the next day, right? We wait for our floor to get put in place. We break to the upside. Our one-to-one is about right here. Hits our one-to-one right towards the end of the day. Our halfway point would be about right here. You'd be holding this trade for most part of the day unless you were okay with the profits right there. So now we are 3-0, right? We go to the next day. Look right here. We break out. We at least hit our halfway point to go in a risk-free trade. We did not quite hit the 1-to-1, but you don't take a loss on this. Now you're 4-0. Why? Because it's simple. Remember, we measure this move. We come up. Here's our 1-to-1. Here's our halfway to 1. Once it hits the half to 1, you put a trail stop in all your contracts, and then you're moving your stop from here simply to about right here. And guess what? You break even or take a little winner when you're runners, and you sell out for another winner. So now I believe we were 4-0. Now we're 5-0, right? We'll clear the draw link set, and we'll go to the next day. We're at 928, and we're 5-0. 928 is right here. 928. We put our floor in. We break to the downside. Now we're 6-0. Then we come to the next day, right? Now we break to the upside. We're 6-0. Now we're 7-0. Then we come all the way down and break to the downside. And then we break back to the upside. So this would be a loser because we never even hit the halfway point. So now we're 7-1. I wouldn't have taken this trade, but just from a back test, it would be a qualified signal. And you could have taken it. I personally wouldn't because I like to get my 1 or 2 trades a day and walk away. You'd be 7-1 with this loser, and then you'd be 8-1 with that winner right there. So we come to the next day. We are 8-1 right now. We break to the downside. Now we are 9-1. Then we come to the next day, right? Then we break to the downside, 9-1. We're 10-1. Then we break to the upside. Now we are 11-1. You come to the next day. We are 11-1. We break to the downside. Our 1-to-1 is about right here. Halfway point's right here. Never got stopped out on our runners. And look what happens. We're now 12-1. You see the power of it yet? Let's go to the next day. 15-minute got break to the upside. Our 1-to-1 was here. Now we are 13-1. And let's go to the next day. 13-1. Our levels auto plot in. Comes down, hits the halfway point. You'd be risk-free. Now you're 14-1. We break to the upside here. Your stop out is down here. Never broke out. And on this day, we ended up making like 200%. Now we were what? I forget what we were. We were either 13-1 or 14-1. I think we were 13-1. This would be 14-1. And then this right here would be 15-1. Let's go to the next day. Then we break to the upside, 15-1. Now we're 16-1. We go to the next day. 16-1. We break out to the downside. We hit our halfway point. You'd be risk-free. You are 16-1. Now you're about 17-1. Then you go to this day. We break to the upside, 18-1. Then we break to the downside, 18-1, 19-1, right? Then we scroll over, and then we come into recently, broke to the downside. Our 1-to-1 was about right here. And our halfway point was about right here. We hit our halfway point right here, give or take. And then you'd be risk-free. So we were 19-1. Now we'd be 20-1, right? Then today, breaks to the downside. You're 21-1, right? So if you come over here to our calculator, and over the last about 15 days, you could have been 21-1. So if you take 21 divided by 22, would you be happy with a 95% advantage? This is what we do each and every day, and this is just one of our day trading strategies in our room. If you'd be happy with this, knowing the probabilities, give me a double 1 in the chat box. If you feel you'd have an advantage of this, and you understand this now, put 2 1s in the box. Everyone's putting double 1s. There we go. So that is the beast mode floor strategy per se. I learned this, like I said, in my earlier days when I was looking for the Holy Grail. I was looking to never lose a trade ever again. Well, I'm just going to share with you that does not exist. So to me, trading comes down to being consistent, using proper risk management, and following your rules. If this broke down, did not hit the halfway point, and then went back up, you cut it there for a loss, right? So we in 15 days, we won 21-1, and maybe that's even off. Maybe we were 20-1. So if we do 20 divided by 21, our win rate is still all but the same. If we went 19-1, because maybe I didn't add up right, 19 divided by 20, look at our win rate. We're still at 95%. I'm not telling you that we're going to win 95% for the rest of our lives, but we have a very, very high advantage for us to take profits using this. And the best part is our auto plotting indicator takes care of all the work for us. It puts the levels in each and every day. So it doesn't just work on SPY. Look at the Qs. Let's look at the Qs. The Qs, right, broke to the downside. Our 1-to-1 would be right here. Here's our halfway point. Guess what happens? Hits our halfway point. You go risk-free. Get stopped out of your runners. Guess what? You still won. You still won on that trade. You go back a couple days on the Qs. I don't even know what's going to happen. Broke to the upside. There's a winner. Our auto plotting floors. Oh, guess what happens right here? Broke to the downside. Come all the way back up. You get stopped out for a loss. You take calls, and then you get your money back at your 1-to-1. So on this day, you'd be 1-1. So in the last 2 days, you'd be 2 wins, 1 loss. Then you come over here. We break to the upside. There's another winner. 3-1, right? Then we break to the downside. 4-1. Then we go to the next day. We break to the upside. 5-1. Then we go to the next day. We break to the downside. 6-1. Then we go to the next day. Today we broke to the downside. 7-1. So in the last couple of days, just on the Qs, what's 7 divided by 8? 87%. That might be a little more realistic, maybe a 90% win rate. But we have a very, very good advantage. Once the floor or the ceiling is broken, we have an auto plotting indicator, and we use this live in our room. With that being said, that is how easy this new indicator works and how it gives us the advantage over the long haul. Does anybody have any questions?
When can we get the video to review all this, Mr. Speedy Gonzalez?
Hey, all right. So no questions other than Mr. Edwards. So I'm going to cut the recording. Once this recording is done, then I'm going to put it on my YouTube channel, and then you guys can go back and watch all this. So I appreciate each and every one of you guys. I'll see you guys at the bank. Keep up the good work. Remember, trade your plan and plan your trade. Use proper risk management and stay consistent to the plan. Beast mode out.